following program was provided by an independent producer solely responsible for its content. The opinions expressed do not necessarily represent the views of this station, its staff, board of directors, or underwriters.
Welcome to Real Estate with Harmony. My name is Sandra Ziem, and I'm the owner-broker of Harmony Real Estate. Today we're going to be having a discussion with my special guest, Jennifer Robertson, who does reverse mortgages. Relatively new product, I think, at least for me, and having been in real estate 40 years. FHA, for instance, has been around forever, but there have been changes even, and so I'm assuming it's evolving, and I want to get all those details. But before we do that, tell us who you are and how you chose to specialize in reverse mortgages.
Thank you for having me today, Sandra. I really appreciate the opportunity. My name is Jennifer Robertson, and I am a 17-year mortgage banking
Don't look
veteran.
that old.
Thank you. I appreciate it. Actually, I started pretty young. I came from a builder family and real estate family, so I came from that background, find myself in the mortgage business at an early age, and did traditional financing, regular mortgages for about 8 years, at which point I had a family member who inquired about a government-insured reverse mortgage, and I, like many people, made some assumptions about the product. Even being in the mortgage industry, I had some assumptions that I had made. Once someone, a dear friend of mine, sat me down and explained to me exactly how the government-insured reverse mortgage product works, that was really when a light bulb went off for me. And I said, wow, really, this is such a misunderstood product. The key to it is going to be education, and if I can get people to understand it, then they'll be, they'll feel safe participating in the product, and they'll reap the benefits of it, which to me, I think there are, countless benefits to the product once you understand it.
Well, like you say, for the right person, there is no better loan.
That's right.
For the wrong person, it's obviously like anything else, the worst loan, and certainly there are a lot of people out there that I think would benefit from it and aren't even aware.
That's so true.
When I think of it, I think of people who, for instance, if I have no children, I have no family to leave my money to, then why am I saving it? So Uncle Sam can steal it? I mean, I guess that's a little
well, and
strong, but
that's true. I mean, the eligible, Americans, and again, for you to be eligible, you do have to be at least 62 years young. Once you get to 62, if you're in a position where you're not concerned about who's going to inherit your estate, you don't have heirs, or you have the heirs and you're not interested in leaving anything to the heirs. There are certain people who subscribe to that belief as well. So in that aspect, in that situation, if your house, if your real estate, your primary residence is one of your many retirement assets, why not consider it as part of your asset spend down? But again, there's certain people that are absolutely stuck, that they want to leave that house unencumbered to their heirs. Sometimes there's adult children, handicapped children that reside in the home, and that if and when their parents pass away, they intend to continue to reside in that home and need to stay in the home. Well, in that situation, a reverse probably wouldn't be the best fit, because you really want to leave the real estate unencumbered to your heirs.
So you really can explain. I would think it would be very easy to ascertain whether it's an appropriate fit or an inappropriate fit, because going to this conversation that we're having, yeah. we had one where the fit was absolutely, I feel like we did a big favor to that lady. I feel like she benefits every day from it, because now she has no mortgage payment and she can live on her money. And, there are some of us who are not affluent and need a little help, especially in your old age. I don't think you want to be a tight shoe.
That's right.
Not having enough money can be very uncomfortable. I know.
Right.
I'm touching myself like you told me not to, right? So,
that's right. Don't do that again. The truth is that when you don't have an emergency fund, when you don't have peace of mind when it comes to finances in retirement, I think it chips away at longevity. I think it keeps you up at night. I think you need your sleep to have a long, healthy, happy life. And when you're worried about whether or not the rising cost of living is going to exceed your now fixed income, because once you're in retirement, you are typically on a fixed income. And if
Stress
only,
is a killer.
absolutely.
Stress
And
is
if only the
absolutely a
cost of
killer.
living was fixed, you go to the doctor, you find out something else is wrong, and there's a new prescription you have to pay for. You could pay the mortgage before that prescription was prescribed to you. Now all of a sudden you're wondering how you're going to make the next
And
mortgage
today,
payment.
some of those prescriptions are outrageous. I cannot believe the price of some of our
Absolutely.
$100 for a pill.
Absolutely.
I mean, my husband had a stroke, and they wanted $100 a pill, and I had to fight tooth and nail. And it was a critical. He needed it.
And this
but
is
I
just
had
it.
to fight big time to get it. So tell us, Jennifer, how you qualify, some of the guidelines so that people will understand how they get it.
In order to qualify for a government-insured reverse mortgage today, you must be at least 62 years young, and you must live in the property that we're talking about. So we can only put a government-insured reverse mortgage on your primary residence. With that being said, your primary residence needs to be a specific type of property. If it is a single-family home, it qualifies. If it is a multi-family home, but you happen to reside, you are the owner-occupant of at least one of those units, you'll qualify. If it's a condominium, it's iffy. If it's a HUD-approved condominium, you'll qualify. If it's not approved, we need to be able to get that condominium association approved through HUD, and that's something that I can help them with. Other than that, you know, if you're 62 years young and you live in the home and it's one of those property types, you're going to qualify for a reverse. People often ask me, do you have to have the house paid for? That's not one of the qualifications. The house does not need to be paid off. However, one of the qualifications, one of the requirements of the loan is that with whatever proceeds you have, we're going to have to pay that outstanding mortgage off. So if you qualify for a $100,000 reverse and you have a $25,000 outstanding home equity line of credit that needs to be paid off, we should be able to make that work. If you have a $200,000 mortgage and I just qualified you for $150,000 based on your numbers today, well, you know, we're coming up $50,000 short, and that's not uncommon to
So
find
it's
yourself in that
about
situation.
equity. It's about how much equity. So how much equity do you think, how does that formula work? Because there's got to be a formula.
It is a formula, and it's tied mostly to your age and loosely to interest rates. And I'll give you a ballpark. I don't want to talk out of school because, again, everybody's formula is precisely their own. But in the past, the formula has roughly mirrored your age, give or take. So if you were 62 years young, you just turned 62, you just became eligible for your government-insured reverse, you would call up a reverse mortgage lender, and you would find out that you qualify for roughly 60%, give or take. You know, over points in time, it's been less, a little bit more. There were some really big changes that took place in the reverse mortgage industry last year. There was the Reverse Mortgage Stabilization Act of 2013 that was signed by President Obama on August 9th of last year. That piece of legislation gave HUD the authority to make changes to the program without Congress's permission and going through a proposed rulemaking changes session to the program. HUD can make changes to the program.
So can we go back to the formula first? So if at first the house has to be appraised, I'm assuming, and I don't want people to lose track of that.
That's correct.
Because a seller could think their house is worth $300,000, but if it comes in appraised at $150,000, that's the figure you're working off of, right?
That's right.
So if
That's
it
right.
came in at $150,000, if you were 62, you could borrow up to 60% of that. So
Roughly 60% of that value, that of course I'll get the house appraised, that's correct. Now, when that piece of legislation passed and was signed into law, HUD made some immediate changes. There are two parts of the changes that they're going to put into place. The first set of changes took place October 1st of last year. And with that, our loan to values, the percentage of the home value that we have access to when we apply for a reverse mortgage dropped by about 10%.
So are you saying it's 50% now?
Roughly 50% at 62 years young
So let's say
now.
I'm 90
That's
years
correct.
old. What is the difference in the age spectrum? What's the maximum anybody can ever get? And obviously the minimum would be 50%.
The minimum's going to be about 50%. The maximum that you're going to cap out at is roughly, I see, around 70 to 72%. Now you're in your late 80s, mid 80s, late 80s to get up that high at this point.
Yeah.
So in years past, you were able to access more equity out of the home. And as the program continues to evolve and we get ready to accommodate the boomers taking out their reverse mortgage. That's you. Absolutely, that's you.
I'm booming all over the place.
That's right. That's right, you are. That's right.
Well, it's interesting. So the appraisal, can you challenge that appraisal? Do you have the same, like I know in regular real estate loans, if it came in lower than I thought it was, then I could go out and get other estimates of value and say, I think you're off base, look at these. Will they do that with you at all?
I can. I have the ability to do that, yes.
Yes.
You're familiar with the appraisal process. It's very broken down. It's splintered at this point. Lenders and appraisers don't work together anymore. We have to work through this middleman to make sure no funny business goes on anymore.
Conflict of interest, yes.
Absolutely. So what we do now is we order the appraisal. I think that's probably one of the most important things to recognize as a reverse mortgage borrower is that the lender that you choose to work with, one of the key things that you want to pay attention to is who are their appraisers? Where are their appraisers going to be traveling to your home from? If you're calling one of these national 1-800 numbers, you see the TV commercials on TV all the time now, the actors and politicians that will remain nameless that are telling you to call their 1-800 number for more reverse mortgage information. They're in California, they're down in Georgia, they're down in Texas. They're not familiar with New England property. I think it's far more important for you to work with a local reverse mortgage lender, particularly when it comes to the appraisal process.
So are you saying to me, in fact, that if this company is out of California, they're going to use a California appraiser for New Hampshire?
No, not necessarily. Of course, they're going to have to send a New Hampshire licensed appraiser. But there are appraisers that have their New Hampshire license that reside and work in Framingham, Massachusetts, for example, or Needham. The best example is I just had an appraisal in New Boston, and well, not just, but recently. When I worked for a national lender, and the appraiser showed up from, indeed, Needham, Massachusetts. And when a Needham, Massachusetts appraiser is attempting to appraise New Boston property in New Hampshire, it doesn't always come in pretty.
No, it wouldn't.
Right.
Actually, the thing about it is, too, if you know who the appraisers, obviously local people know who the local experts are.
That's correct.
They also know who the Johnny-come-latelys are, and no offense to those Johnny-come-latelys. We all have to get a start in life.
That's right.
But as far as expertise, it is that person who has years, I've always said, experience pays for itself.
That's right. And in my opinion, the appraisal is so important in the reverse mortgage transaction. It's the basis for what we're going to give you your money on. I mean, I'm going to give you 50% of whatever that appraisal is. It's important to get a local person and someone who really knows the area. For example, Nashua, there's different parts and sections of Nashua. So you just really need to know what part of town you're working in and what part of town you want to be comparing that property
Well, the comparison I would make on that is the north end of Nashua is generally thought to be, desirable.
Same as Manchester.
So, but if you had, a house that was in a lesser neighborhood, but a very expensive, wonderful house, there would have to be an adjustment made for that location. I mean, we just had one like that, and it's very difficult because what comp do you use and what adjustment do you make for a lesser neighborhood?
Of course.
If you put me on a busy street, is it worth less than if you put me on a cul-de-sac where there's no traffic and my children can run and play with no threat?
Well, and this is just it. If market value is supposed to be a reflection of what buyers want, having just bought a house and having twin girls that are 5 myself, I would never have bought a house on a busy street.
Yes.
I looked for that property on a cul-de-sac that was quiet. So is it, is a property worth more? I paid more for a property to be off the busy street with my twin girls. So
what about when people do mortgages, the big thing is qualifying, are there any qualified, what do they
No.
have to do? See, isn't that wonderful?
This is the beauty of the
Praise the
government
Lord.
insured reverse mortgage, but I'm gonna preface that by saying no, not yet, not yet.
Hurry, folks.
And that is the second wave of changes. That piece of legislation that went into effect last year, first set of changes, it limited your proceeds. We lost 10% of our loan amounts last October, and there were some additional things that took place in October. The next big wave of changes were really supposed to take place January 14th. Those changes were delayed. They were not implemented, but they will be implemented. And what that change will be an income and credit assessment for reverse mortgage borrowers on the go forward.
So what is the thing, if I have no payment to make, then what value is a credit report? Because
that is such a great question. And that has always been the reason why we have not credit qualified or income qualified borrowers. We don't need to know if they have enough money coming in to make the payment because we don't expect them to make the payment. They can if they want.
Well, are they going to adjust it? I mean, I could see if there was some kind of, they wanted to make sure that you still had money to
for
pay your
taxes
yes.
and insurance. And that's really what the crux of this is that you have the right, your only obligations as borrowers in a reverse mortgage transaction are to live in the property, don't let it fall down around you. In other words, preserve, maintain, and protect. It doesn't mean cut the grass every week. No one's going to check. But don't let it become condemned, in other words. Live in it, preserve, maintain, and protect it, pay your taxes, and pay your insurance. Now, the way it works now, you could say to me, I am 62 years young. I live in my home. I need this reverse mortgage to pay off my existing mortgage balance. But after that payment's gone, I still don't have enough to pay my taxes and insurance. So I'm not going to pay them. I'm just going to close the loan. I'm going to let my insurance get canceled, and I'm going to let tax liens pile up. That's an instant foreclosure in the reverse mortgage world.
I understand they will too.
You have to pay your taxes and insurance at this point in a reverse mortgage transaction, or the lenders are really being forced to do something about it now. So in order to make sure that we're not setting seniors up for an instant foreclosure, we're going to actually make sure that they have the capacity with which to manage those taxes and insurance on a go-forward basis.
Wow.
The question will be, how long are we going to force them to demonstrate they have the capacity to manage them for? Are we going to make them show us that they can afford the taxes and insurance for 4 or 5 or 6 more years? Are we going to make them prove to us that they have the capacity to pay those items for their proposed lifetime? And I don't think that would be fair, but that could be the way that HUD decides to do this assessment, in which case it won't be a welcome change, I can say that. We'll see what happens.
It's always interesting. This market we have now, we all reflect that indeed they closed the gate after the horse got away.
That's right.
They had all of
They
these.
sure did.
Well,
Such a great way to say it.
They had so many violations of good lending.
Yes.
And because they did that, there were people who were enabled to misuse it. And now those of us who didn't misuse it will pay the price.
We don't have access to even common sense programs now. They've almost kind of knee-jerk reaction too far. Because
Always
again,
the way.
The crisis really, kind of put an end to a lot of those bad practices by default. Those investments and those mortgage-backed securities blew up in investors' faces. So there's really no appetite for those types of products anymore. And we are just, regulating in some ways a little bit too far. The appraisal process, I think, from a lender's perspective and from a realtor's perspective, I think we can both agree that the appraisal process has gotten far more broken since the crisis. Now, it was broken before, but we've gone and almost overcorrected it and made it,
It will evolve back. We seem to do this constant evolution where we go one extreme or the other, like in politics. You're either all the way to the right or all the way to the left.
Yep.
Somewhere in the middle, there's reason.
That's right.
Logic, but we
That's
don't,
right.
as a nation, we don't seem to ever find that. But
no, we don't.
It would be nice. It would certainly be nice if
That's
we
right.
did. So from a personal perspective, do you find now you prefer this reverse mortgage to the other mortgages that you used to do?
1,000%. In fact, when that family member down in Massachusetts sat down and looked at this product, and at the end of the day, my objections were the same that everybody else has. I said to my aunt, I said, I think that's when the bank owns the house when you die. I'm pretty sure that they get to sell it. It's not part of your estate. So there's one of the assumptions that I made that was completely wrong. The closing costs.
So while you're saying that, then tell us the process, the true process.
The true process is that you're simply borrowing against the home and you only owe what you've spent out of the home. A reverse mortgage is the exact same thing as a home equity line of credit.
So if you died, the estate would either take over the sale and pick the realtor or sell it themselves, whatever they chose to do, but it would not. So if you died and you had no family, it would go to the state to.
That's correct.
All right.
That's right. If you die, your real estate is part of your estate. Your estate is being left to your heirs. Your heirs will decide how and what to do, with the property. Most children, when they inherit their parents' property, they have one thing on the brain: let's sell it and get rid of it. And if there's a reverse mortgage on it, you're hoping that when you go to look at the numbers, they work in the sense that they're going to call you and they're going to say, Sandra, we just inherited this property on Main Street in Nashua. Come tell us what it's worth. And you come out and tell them, well, I think we could market this property today for about $300,000. If I'm the heir, I'm hoping that my mom and dad's reverse mortgage statement has a number on it south of 300,000, right?
The further south, the better.
The further south, the better, because I'm going to get the difference. If they only owe 100, you sell it for 3, I get 2, right?
But predicting that future is pretty hard, especially when in my 40 years, I never thought that I would see what has happened in the last 5 years.
Of
never.
course.
I mean, in my other 35 years, it just went constantly up, 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 up.
Yep.
And now all of a sudden, we've had at least 5 years, probably more than that.
In some cases, double-digit depreciation.
And people have been, so many people upside down. What a shame. And that has to be, talk about stress, talk about putting you in the hospital.
And that's, that'll do it every time.
I've actually been to listings where I ended up crying. I mean, the people just broke my heart to hear the circumstances that they were in. And,
I'm the same way, which is really why I think this product and I get along so well. To me, this product, if you can help people understand it, it sells itself. I've never really been a good salesperson. I'm more of that education type person. If you asked me in school and even in high school, what do you want to be when you grow up? I would have told you I wanted to be a teacher. So having fallen into the mortgage...
But you are a teacher.
Now I am, having discovered reverse. So 10 years ago when somebody sat me down and said, this is what a reverse mortgage is and this is how it works, I don't do traditional mortgages anymore. I stopped that day doing purchase loans, refinance loans, home equity lines of credit. There are plenty of good people in this area that do mortgages. I don't do them. I only do the government-insured reverse mortgage.
Well, and for the purposes of the public, the way I come to know Jennifer and the way most realtors come to know you is through the classes that you offer to realtors. We, of course, have to have, I think it's 12 credits now that we have to get every 2 years.
You do.
So we have required classes that we have to take, and then we have some that are optional.
Yep.
And I have been twice to your classes, and I have to say that they were always a step above.
Oh, I appreciate
well,
that.
no question about it. You seem to have put your arms around it, and you seem to have all of the little everything has its nuts and bolts. And it's understanding every single one.
Yes.
Because you don't know which one is going to choke at the end of the process.
That's right.
So if you
the devil is in the details, especially when there's a complex product involved. And I remember being a regular mortgage officer, there were, especially in the boom, there were 150 different programs that you could put people in. And you had to know the guidelines, the nuances, the debt to income, the LTVs, the CLTVs. You almost had to be an expert on 150 different programs.
And to some extent, I think it's still that way. To some extent,
it is. If you're a regular mortgage officer, you are responsible for knowing at least 24 programs that you can put buyers and refinancers into. I only have to know one. I have to know one product. So I make it my business to know every little thing there is to know about it. If you've got a unique home, if you've got I did a circular home in Brentwood. It was a circular home, truly just a circle with the beam up the middle.
The house was circular?
Can we do it? Yes, we can do it. Can you do a reverse mortgage with an irrevocable trust if the property's been placed in an irrevocable trust? Every reverse mortgage person, for the most part, will tell you no. I know that that's not the case, that you can indeed do something with an irrevocable trust if you know the proper ways and the workarounds. So I really do pride myself on really knowing the product inside and out. That real estate class that you've attended is, I think, probably the least understood thing about the product that's happened recently. In 2009, HUD allowed this product to be used for purchase, which had never been done before. So now,
and I didn't even, I can tell you, here it is 2014, and I had no idea, so I hadn't even, I tell you, I hadn't even heard that, and probably my own fault. And that goes to your point about you can't know everything about everything.
That's right.
I always had this thing that as a realtor, I need to know, I never, some real estate companies have a policy that when you come in, they have two sides to their office. One side is a loan officer, the other side is the realtor. And first you go to this loan officer. But my thing was always, if I send my client to a loan officer who doesn't know his business,
yep,
they could cost me my income.
Of course.
And so I tell myself, I need to know when they're wrong. I need to know how competent they are. I need to be able to say, this is somebody who knows what they're doing,
yep,
or this is somebody who is learning on their feet. And when you learn, you make mistakes. You just do.
That's
it's part of life.
It's important to own the mistakes, though, too. And it's also important to admit when you don't know and you're not sure, and go back and do the research and figure it out. What's nice about the reverse mortgage product is that all of these loan officers scattered throughout the area, for the most part, not too many of them have access to the reverse mortgage product. So if you call an average mortgage company, if you pick up the yellow pages and you look through national mortgage companies and you start dialing, you're not going to find too many that if you ask them, can I apply for a reverse mortgage with you, not too many of them are going to say, yes, we do offer that product. Again, it's a very complex product. It is the polar opposite of a 30-year fixed. So
let's go back to the new construction. If I'm going to do a new construction, or not new construction, but I'm going to purchase a home now on a reverse mortgage, is the same formula? I need to bring 50% down payment to the table and they will lend me 50%?
That's correct.
And there will be no payment on that 50%. So if I was buying a $300,000 house, I would have to bring $150,000. They would lend me $150,000, and that $150,000 would have no payment until I died.
You just hit the nail on the head. Now put this into play. You have a seller that's going to sell a small condo for $150,000. That's all the money that they're going to have. They want to buy something for $220,000. Is that possible in their mind? Not unless they want to sign up for 30 years worth of payments, right? And you suggest to someone in their early 70s, late 60s, why don't you sign up for a 30-year fixed? And they look at you like you're crazy, right? I don't want to write a check for the mortgage till I'm 99 years old. So that's where the reverse mortgage.
I hope I live to 99.
Me too.
Yeah, I enjoy life. I enjoy
too.
talking to people like you and trying to make myself knowledgeable about everything that's out there. At Harmony Real Estate, I always ask my agents to know about lending, to know how to qualify. And that, another question, and so the interest rate, is it competitive? Is it the same as you would in any other loan?
Yes, well, it's slightly different, and there's an adjustable rate product and there's a fixed. The adjustable is going to hang out in the low 3s at the moment. The fixed, somewhere in the mid 4s, sometimes high 4s. This loan does have PMI on it. So we don't call it PMI. When it's a HUD loan, we refer to it as MIP, but there is a charge for MIP on this loan as well. The important thing to remember is that in a reverse mortgage, you're going to get a statement every month. It's going to tell you what size reverse you were approved for initially.
And it's what they call negative amortization, right?
It can be. Negative amortization happens when your loan balance goes up. So in a reverse mortgage situation, if I approved you for a $100,000 reverse, let's say you've only utilized $50,000 of that $100,000 that I made available to you. I'm going to send you a statement. You'll look for your outstanding principal balance. How much do you owe me at this point? Well, you've only utilized $50,000, so that's what you owe me.
But it wouldn't add the interest on that, for instance, if
that's
it's 3%?
What I'm going to charge interest on. So if the interest rate was, let's just say 3%, I would figure out what 3% of $50,000 is. And now remember, I'm sending you a monthly statement, so I would do that calculation and I would divide by 12, and I would say to you, okay, 3% on $50,000 is roughly $120 in interest due this month. You're going to look at that that payment due at the bottom of the statement, and you're going to see some big letters that says, this is not a bill. This is where it turns into a reverse mortgage for you. That $120 in interest that's due this month is deferrable for your lifetime if you choose. So there is nothing that stops you from getting your checkbook out that month and writing a check for that interest. People say to me, I cannot deal with the idea of my mortgage balance going up on me. That will keep me up at night. How do you prevent that from happening in a reverse mortgage? You get your checkbook out like you're used to doing.
So
but you have the peace of mind that if, God forbid, there was a month where the mortgage payment that you usually make got spent on an expensive prescription or got spent on an expensive car repair, that you're not stuck without that mortgage payment to go out the door. You don't have to make the mortgage.
So usually the closing costs, I use a general figure of about 6%. Is that typically the case with a reverse mortgage?
It is typically the case. I would
and
say,
is that included in the 50%, or do I need to bring that with me?
You have to take that out of your proceeds. So you won't have to come up with any cash before your reverse mortgage closing or at your reverse mortgage closing. I work a little bit differently in the sense that I typically will not collect an application fee from you either. So most reverse mortgage lenders will ask for you to prepay for that appraisal. I just don't really believe in that practice. If we go into it with a realistic expectation as to what it's going to appraise for, I'm not going to ask you to prepay for that appraisal. We get to the closing table. If your closing costs are 6%, if you want to pay me cash for the closing costs, you certainly can, but not too many people want to bring money to their reverse mortgage closing. So they're usually paying for the closing costs out of the reverse mortgage number that's available for them.
Do you have any feeling of when these changes are going to take place, where they start looking at credit and income?
In the next 6 months.
So that says, hurry up, public, if you want.
It almost kind of does.
Yeah, it certainly
does. And what's the one promise that we do have from HUD is that HUD will give us 90 days lead time. So when they re-announce the implementation date, if it's May 1st, they will give us 3 months.
August 1st.
Right, absolutely. So they would give us 3 months to get people in the door that we know that would not otherwise qualify. Which again, you kind of have to wonder why they would do that, because these are people who, if they don't qualify, they're not likely to be able to pay their taxes and insurance. So let's get them in the door quick so we can foreclose on them next month. I'm not sure that makes a whole lot of sense.
But I can see where there would be some people who would make the shoe so tight, financial end of it, if you will, that they could risk not having the money to pay taxes or not having the money for maintenance. Maintenance in a house can be very expensive. We just did a roof. I can tell you it wasn't cheap.
No, and it's the unexpected maintenance that kills you. And
sometimes
then, of course,
houses are worse than kids.
That's so true. It's so true. When you have the house and the kids, boy, you really have a few holes in your pocket.
Yeah.
But I think that's another thing that I am never one to come in to someone's kitchen table, and this is how I work. People usually call and they'll say, I'm looking for information. I'm a firm believer that the best way to understand the product is with me in front of you. And I don't bring marketing stuff, I bring educational stuff, and I actually hand write out about 5 pages of notes with you, and we go through them together. After they've gone through that process, they have some more homework to do. They still have to go through mandatory counseling. They have to, we have to get their house appraised and all of that stuff.
So the mandatory counseling, tell me about that.
Well, we sit down, right, and I'm going to explain to somebody what this reverse mortgage product is, and they can look at me at the end of this conversation and they can say, I understand it, and I love it, and I want it right now. Did you bring an application? Can I sign it? Where do I sign up? I am actually not allowed by law to take their application until they've gone through mandatory third-party counseling that's required by HUD.
Then they have to pay for that?
Funny enough, they do nowadays. Yes. Funny enough, this is mandated consumer protection that you now have to pay for.
Is it expensive?
It's $125 for the session. In the past, there have been housing grants available, and every now and again, the federal government will dish out another round of housing grants, and that will offset some of the agency's costs, and you may find that the counseling is free again for a short amount of time, and then those grant dollars will dry up and we'll be back to paying for
One
counseling.
has to wonder, if you can't afford $120 how you're going to be able to afford to pay your taxes. And I'm not.
That's right.
I understand when we were young and our children were growing up. I mean, life is not easy when you're young.
That's right.
It gets much easier. I tell people all the time, everybody wants to lend us money now. We don't need it anymore. When
That's
we
right.
needed it, they didn't want to talk to us.
That's right.
And
It's
that
so
is,
true.
well, and it's
It's so true, and
unfortunately,
this
it's the
is-
rules of the road.
Right, right.
So-
But you get to retirement. I mean, your whole life you're being told that this house is going to be one of your largest assets in retirement. Here you are in retirement, and there's money inside this house, right? We know there's money inside there, but you want to keep living in it. How do you safely use some of that money and continue to own and live in the property? And in the past, the mindset has always been go down to the local bank and sign up for a home equity line of credit. But we've seen what's happened with retirees and home equity lines of credit. The maximum interest rate on a home equity line of credit is 18%. If you can't afford to write that check every month, they will foreclose on you. Over a $50,000 HELOC. It doesn't bother them.
We had equity, obviously, in our home, and we refinanced. Actually, we just did a whole new mortgage and took that money and paid cash for a second house.
Yep.
So our payment is still the same. In fact, it went down because it was 30 years as opposed to, and we took that money and bought another property free and clear.
Sure.
And that property is paying for itself.
Yep. Yep.
So there's also that end of it, that if you wanted to invest and you wanted to take the money out of the home you're living in to do that, I don't see is that a problem?
Not at all. In fact, I was just going
Yeah.
to say in the 10 years that I've done reverse mortgages throughout New England, I've had at least 25 clients that have taken a home that they own up here in New England, put a reverse mortgage on it, taken the cash out, and bought a second home cash somewhere else in the country. And again, the conversation is always had, well, we're putting a mortgage on the home. The kids are not going to inherit the house up here in New England with free and clear anymore. What are the kids going to inherit? They're going to inherit the property in New England, and they're going to inherit this other piece of real estate that they just purchased. So you inherit two homes, not just one anymore. So it's important to remember that you look at what you do with the reverse mortgage money, and oftentimes, whatever you do with it, if you play your cards right, those things transfer to your heirs as well. You're really just diversifying your wealth.
Actually, you could earn, in my view, you can earn more money than it's costing you to borrow that money. If you can't, you shouldn't do it. It would
That's
be
right.
my view on it.
That's
so I think, so our time is winding down. So I guess I would ask you in the next couple of minutes if there's anything that we haven't covered that you think it's important for the public to know about this loan, because I would hope that from this conversation they're going to have a little bit more comfort with
Yes.
what this product is and whose foot it fits best.
Right.
And so, but I didn't know if I don't want to not give you an opportunity.
Well, I would just simply say that what I have found in the last 10 years of driving all over New England and sitting at kitchen tables and listening to what's going on and what their goals are and what their needs are and what their fears are, what I've come to find out is that people hesitate to invite someone like me over.
To the unknown.
They don't want someone like me in their house, trying to talk them into some product that, they
Yes.
might not really even understand the first time. And I'm going to bring over an application and I'm going to say to them, what's it going to take for you to sign today?
Yeah.
And there are actually a good number of people that do what I do that do operate like that. So those fears are not unfounded. You really have to look out for someone, look for a reverse mortgage person that prides themselves on being an educator, that will tell you at your kitchen table what the pros are, but what the cons are too. Yeah. They're not, a home equity line of credit, the closing costs are far less expensive than mine. So when you're going to compare my product to a home equity line of credit, in the closing cost department, I lose. But I'll call myself out on that, and I'll tell you the good, the bad, the ugly. Ask the questions. Don't sign up for a reverse mortgage because it's been explained to you and you feel like you should have understood it and you didn't, and you're too embarrassed to say, well, I didn't really completely follow that. Could you explain it to me in another way?
Final thing that I heard you say several times, all over New England. You're telling me that you're not just New Hampshire. You're Rhode Island, you're Massachusetts, you're Maine, you're Vermont, you're
That's
all
correct.
this.
I work for a
region.
company called Reverse Mortgage of New England, and we have a licensed person in every New England state.
Wow.
I personally am licensed in Maine, New Hampshire, and Massachusetts. Another individual within my company does Rhode Island and Connecticut. There's only one New England state we don't cover, and that's Vermont.
Yeah.
Again, we are an all-reverse shop. The average loan officer in my company has more than 10 years experience in just the reverse mortgage product, not in all mortgages.
Well, how long have they been doing reverse mortgages?
You know, that's a great question. It's, you said it earlier in the program, it's relatively new. And I think you're even hearing on these TV commercials now, the first reverse mortgage in the country was written in 1961.
Oh, my goodness.
In Portland, Maine. So our neighbors to the north, northeast anyway, is where the first reverse was invented.
Had no idea.
However, the program did not become federally insured or federally regulated until 1988.
Wow.
So they have actually been around for quite a long time. They're just not, you know, in the forefront of people's minds.
Yeah.
They will be, though. So
Well, I see our time is coming to a close, but I want to thank you. I think you were very informative. I have to
thank you.
believe that anybody listening has a better idea of what a reverse mortgage is.
I hope so. I hope they're not afraid of them anymore. They're not bad.
For the right person?
For the right person in the right circumstances, they're a
couldn't
great
be better.
fit.
Yes,
Right.
they are absolutely. So having said that, thank you all for viewing Real Estate with Harmony. And I hope you gained something from this, and I look forward to seeing you again when we discuss more real estate. Thank you.
The preceding program was provided by an independent producer solely responsible for its content. The opinions expressed do not necessarily represent the views of this station, its staff, board of directors, or underwriters.